Shares of RH surging after its report as well. Let's get to Christina Partsinevelos with the details there. I still want to call it, Christina, Restoration Hardware.
I know, so do I, especially if those who go to the bar or restaurant in the meatpacking district in New York. But RH, a stay-at-home winner, continues its streak, and you're seeing shares right now rallying above 11%. The furniture and housewares company, and we know is Restoration Hardware previously, raised guidance for the year and much higher than anticipated. So let's start with the basics. Adjusted earnings per share came in at $7.03. That's a 40-cent beat with revenues just above $1 billion. Also a beat. And you have to keep in mind the street consensus for its guidance is a lot higher, and so that did help the company. But what we did see, and this was the interesting thing, is the company had previously had to delay the launch of its contemporary line and the opening of its first guest house until spring of 2022 due to supply chain issues. But the CEO is pretty optimistic, to say the least. Here's a statement from today's press release. Quote, "We refuse to shelter and shrink, not allowing our culture to be shaped by stay-at-home mandates or let collaboration be replaced by Zoom calls and isolation. No leaders of our team, RH, made their summer home their permanent home. There will be no debates if we would return to work, only discussions of when we could." I thought that was a pretty poignant statement. The CEO and chairman has a lot in store for the company over the next decade: couture, bespoke services, antiques and artifacts, private jets, and a luxury yacht available for charter. This was all in the report. Shares are up 36% year to date, 11% right now. Back to you guys.
Feels very Four Seasons-esque. Thank you very much, Christina Partsinevelos, for that on RH. Let's trade it. Steve, I'm going to lump this into the broader, massive momentum in just home building stocks overall. What do you think? Is RH the play?
Yeah, so I'm looking at a long-term chart. So if you think, first of all, when you look at it on a chart, it looks like it bounced ahead of where it should have bounced on a technical level. So it makes you want to think about trying to get into the stock at this point. But to your analysis of a momentum play, if you go back on a long-term trend line for this one, go back to where the pandemic hit. Before the pandemic hit, this thing is in nosebleed territory. So you could feel extremely positive on the name as long as housing is doing better, as long as people are buying houses with their Bitcoin profits. This one will do okay. But when the music stops, this one will come in very hard. Please, if you're thinking about buying this, look at a long-term chart on this. It has a lot of room to fall.
All right, so let's talk about this, Tim. What do you think? Is it here or is it Lowe's? I only say it because Lowe's made a record high in trading today.
I like them both, and I'm a huge buyer of the home builders trade. That's really broader outside of the home builders themselves. At 24 times next year, this stock is not expensive. I prefer Williams-Sonoma to this one, but I think both these stories are part of a trend that's not over and not just about COVID. I think both of these retailers are in great position. I think people will continue to have value in their homes and beef up their, essentially take the net value and the net equity in those houses and reinvest it. These companies are the beneficiaries. They're not expensive. 24 times, not bad.
All right, RH is certainly, though, from a product standpoint, on the expensive side of the spectrum out there.